Hello everyone, welcome to this webinar of IG Bank in collaboration with Ron William, our expert in trading psychology. Welcome to all of you to this follow-up webinar on trading psychology. My name is Philippe, I'm the head of sales at IG Bank, and I will be assisting Ron, our trading expert today, during the question and answer session that will take place in the last part of the webinar. I would like to thank all of you for joining this webinar that is a follow-up session to the seminars on trading psychology that were organized in IG Bank offices in Zurich and Dickens. IG Bank is trying to bring the trading and investment world closer to the public. Not only making people able to invest, but also improving financial education. We are offering education material on different areas, such as technical analysis, money and risk management, fundamental analysis, and trading psychology. You will be able to discover our educational offering on our website, ig.com. Our financial educational offering is very diversified because for IG Bank, education is key. Before turning it over to Ron for his presentation, I would like to give few hints, few information about his financial background. Ron William is a chartered financial technician and neuro-linguistic practitioner with more than 20 years experience in financial markets. He has worked with institutional firms, producing macro research and trading strategies for a range of professional clients, including investment banks, money manager, and hedge funds. Ron also serves as a wealth mindset and transformational coach at FTSE, using latest techniques in peak performance, neuroscience, and mindfulness. Without any more delay, I'm handing over to Ron and wish you all a very good webinar. Thank you. Over to you, Ron.
Okay, so just give me one moment to set up. Can everyone see my screen okay?
Yes, we are.
Great, thank you. Thank you very much, Philippe, and to the rest of the IG Switzerland team. It's an honor yet again to be following up with this trilogy of trading psychology and behavioral finance kind of work. First of all, let me just jump into a few guidelines on talking points about work that we've done and work that we'll do today. First thing is this is the part 3 of what was a two-part live session, both in Geneva and Zurich, and of course this is the online follow-up sometime later. For those of you who want to review, and there's quite a lot of popular requests for that, review past material, this can be available now, I'm told, by the IG team on the IG YouTube team. So IG Bank Switzerland, their YouTube channel, and potentially other ways, you can now view the 1-hour part 1 presentation on there and take more notes. In addition to that, a summary workbook will be sent. That's something that I've been quite keen to share with everyone. So that's to be confirmed in terms of timing. But essentially, that'll be a summary of some of the slide work, but more importantly, workbook examples that you can use as a reference in order to basically improve your awareness of trade psychology, but even more importantly, your P&L performance in trading. And then lastly, be aware that there's ongoing market interviews and general trade psychology work that I've been discussing with IG headquarters in London with the resident media presenter Jeremy Naylor. So you can also find that, I think, if you just go to the IG main YouTube channel and just type in trade psychology, wealth mindset, or just type in my name, Ron William, and you'll get some extra information there. So plenty of tools for you to use to learn and develop into the new year of 2019. Can everyone hear me clearly okay? Just want to double check that the mic's okay. IG team or anyone on the chat?
We can hear you clearly.
Great, great. Okay, so a disclaimer, I won't be going into market analysis or market calls, but just for the sake of being compliant, here is the slide. And of course, Philippe very kindly gave me an intro. Most of you would have attended the webinar, the sessions we did before, so I shan't say any more than that. Keep in mind that the key areas are peak performance, neuroscience, and science in general, mindfulness, with the focus on just how to de-stress and how to kind of get into that trading zone. I always kind of give a tribute to the pioneers of trading psychology, and the two people I have followed quite a lot over the years in this space has been Dr. Van Tharp and Mark Douglas. It would be great to know that anyone attending this webinar might consider to read these books for a lot more information from some of the world's top trading psychologists. They've been doing what they've been doing for well over 30-40 years. Let me know if you have done that, if you've read the book or you're about to do so in the coming time ahead. One thing I would say is, because I know not everyone is a traditional reader and actually has a physical book in their hand, but I would recommend, you know, nowadays there are so many options: audio books, electronic tablet books, and the physical book if you're a traditionalist like me. Either way, there is no excuse. If you really want to improve your trade psychology awareness and ultimately boost your trade performance, we need to be learning. We need to be developing ourselves in order to find an edge, and in order to continuously update that trading edge in the market. We need to be absorbing more useful information. Any points on that? Can I just get a quick vote from each of the people here, and just to make sure that we begin with the intention of our interactive session. In your chat box, just let me know if you are reading a trade psychology book, blog, or you're about to. Let me just a quick show of hands, just drop in the chat if you are, and if so, what are you reading or what are you planning to read? Just going to open that up so that you can all say something in the chat. I'll give you a few seconds. Is it okay for everyone to drop in the chat something they're reading, book, blog, or something they plan to read? I'll give you a few seconds to respond, but that's the open question. If you're able to drop an answer in the chat, and I'll pick it up in a moment. Going forward, of course, the interview I gave you with Dr. Van Tharp, some basic collaborative work based upon his lifetime work. Again, if you have questions about that interview during this discussion, that should have given you a lot of food for thought. Now, the main focus is the two live sessions that we've had. Since then, there was a rough 10-day challenge, which continues, really depends on when you started it. I gave that challenge for everyone to start on the day or the day after of the last session that we had in Zurich. But essentially, just to be clear, that 10-day challenge is for you to do daily practices of anything that you had learned during our double live session in Geneva and Zurich. And so that includes, developing your personal goals, doing the belief exercises, which we'll do today, just to see what other beliefs can be uncovered. Negative beliefs that need to be replaced with empowering beliefs. So Philippe, for example, head of sales at IG Bank, shared with us a belief he once had about volatile markets and whether that was good or bad. And that as a empowering belief to replace that, that everything was possible so long as we developed ourselves and learned new successful strategies in order to navigate the changing markets. And this year is the year of changing markets. I'll go into that in a few minutes on a new updated slide I have on volatility. But essentially daily practices of so many of the things that we covered in those 2 sessions and more. Personal goals, I gave you that goal mapping technique, which we will spend a little bit of time talking about today. And then a suggestion, a proposal, which I made to each of you on buddy meetings. That's the American term for basically making a friend in the trading world and staying in touch with them so that you could share your ideas, continue to develop yourselves in a friendly, safe environment, but also to give that ongoing motivation, I should say, on your trading journey, just because trading can be a very lonely sport, especially if you're trading by yourself. And so it's always good to be part of a community. And I know that IG is quite keen to cultivate its trading community over time. That's it. So here we are, 13th of December. Keep in mind you can continue with that 10-day goal. Okay, now if we can just have a quick review of everything that was covered over the last 2 sessions. If you're, the chat should be working. Just one moment. So I'm back now, giving you a moment or two. But can I just check with the IG team? Are the delegates able to send some of their feedback on the chat?
Absolutely, Ron. The attendees have the possibility to use the chat option for sending their questions. But anyway, I will also ask you a few questions, and you can also see these questions on the tab questions directly on your tool GoToWebinar.
Okay, great, thank you. Okay, well, either way, I'll continue with the webinar outline. If there's any way that the delegates can engage, be interactive through the chat technically, then that would be great. If there's any technical issues, then we can just go through it either way. Okay, so the big roadmap is what you would have seen on the second workshop, and that's the kind of roadmap to change and transformation. And the webinar and ongoing sessions that we may choose to do in the new year will really be part of this ongoing education. Education never stops, and so really this is the beginning, not the end of your educational journey with IG and with myself as your trading psychologist, specialist and coach. Essentially, it's the peak performance journey. It's a balance of the mind, body, and emotion. And ultimately, in order to begin that journey, you need to have this traffic light approach. Red for awareness. If we're not aware about anything, we're not going to change anything. And then once we're aware, the big C word, change. Amber light. And then in green, we can actually then transform over time. And one of the areas I'm going to be talking about in terms of changing negative habits and improving with a positive pattern of change is repetition. You've got to have some kind of regular practice of something that you have decided is going to be good for your mindset and good for your trading book. And ultimately, you need to do it enough times so that it becomes automatic. In order to do all of this, you have to be aware that there are 2 areas, nature and nurture. There are things that we are born with, like, for example, the survival instincts that basically trigger our fight or flight response in extreme situations. Way back when, it was all when we were in this life or death situation. Now it's anything associated with stress, and of course trading amplifies a lot of stress, especially if we're losing money. The second part of nature is the personality trader type. We all have different personalities. People think that, you know, some of these qualities we are born with, but it's a little bit of nature and nurture. It's certain traits that we're born with, but also it's personality traits that change over time. Either way, self-awareness is key as a trader to understand what your reactions are likely to be to new highs and new lows in the market. And on the nurture side, I mean, a lot of the work is in the beliefs and the values that we have. And when I say beliefs and values, it's beliefs and values in trading, in risk, in money. What do each of you think about each of these concepts? And, you know, some people might think that trading is an easy skill to learn. Some people think it's hard. And then, you know, anything in between. Risk is a really popular one. Different people have different risk thresholds or pain thresholds. And so they're willing to stay in the market for longer and take a bigger loss. Some are very impatient when it comes to a trading loss. Some people like to trade big. Some people prefer to trade small. So this is what makes the market. And this is what makes a successful trader in the market, is really knowledge, self-knowledge and awareness of your beliefs and values on each of these concepts. And last but not least, money is the name of the game, really. We're all here to make money, or at least not to lose money. And a big part of that is understanding our relationship with money, not just in markets, but in general. It's a sensitive topic, but I'm here to help bring about change in your trade psychology and in your market strategy. So, you know, you'll know this about me. I can be very direct and honest about things, because that's usually the best way, especially when we want to bring about change. It's all about the mirror effect. We need to be able to stand in front of the mirror and just be very honest with ourselves about our strengths and our weaknesses in order to push forward. Okay, now just going forward, I want to go into the mapping technique that we spoke about last time. This essentially looks like a complicated way of developing goals, but essentially it's a smarter way of creating goals, and it's based on the technique that I mentioned to you by Brian Main. So whether you're able or not to drop information in the chat so I can know how many of you have done this, please, either during this webinar or afterwards, complete this goal map. And if you have any issues, let me know, or let the IG team know what those questions or issues might be. Because really, to begin this journey, you need to know what your journey is. You need to know where you are, where you want to be, what that performance gap is, and then ultimately you need to have a roadmap as to how you're going to achieve that goal that you want to achieve. You need to have a date to that goal. You need to have a how you're going to achieve it. You need to know a who or a what, you know, what models you're going to use, what people you're going to follow, and so on. And ultimately, you need to know why. The why part needs to be, for the most part, something emotionally driven. If it's too technical or too money-oriented, depends what your drivers are. But even if it's money oriented, it needs to have a reason as to why you want X amount by X time. So the why needs to be something that really kind of motivates you, but also a reason to not give up. Because one of the popular experiences, unfortunately, is patience not being a virtue in trading. And when we go through the ups and downs of the market, it's really important to have a reason to stay in the game long enough in order to learn and improve, and ultimately not give up. So know your why and review your why on a regular basis. Here's an example which I created for the Zurich group. This is just a general template built along the theme of Master the Markets, Master the Mind with IG Bank. But essentially from December 2018, developing a 5-year plan. But if that sounds too crazy, start with 5 years, drop it to 3, then drop it to 1 year. It really doesn't matter. Think of macro, micro, or big picture, small details. All we're doing here is starting with a goal. I would say start with the big picture goal, then drill down to the small day-to-day, week-to-week, month-to-month, year-to-year goals. Any successful business or entrepreneur has to do this. And actually, most successful businesses take about 5 years to break even. I'm not saying that has to be your goal, but I'm just trying to manage your expectations here, especially if you're a first-time trader. All good things take time, especially if you want to develop a consistency about your development and your performance. So essentially, let's say you start in December, you have a 3 to 5 year plan, which you can break down into a 1 year plan and then measure that month on month, week on week. The goal is to be a successful trader. Most people measure that success based upon percentage performance they want to gain per month or per year. I would actually strongly suggest that you focus on percentage performance as opposed to money performance, just because that psychologically gives you a better way of measuring your progress. And the other thing is, everyone's going to have a different magic number as to how much they want to make in the market. It's much better to think in terms of points or percentage measurements, and I can go into more detail on that. The why, let's say you want to be financially independent, or you want a secondary passive income, or you want to invest in an asset. Life balance, a lot of people are stressed with their primary work, and so they want to have more time, usually more time to do quality things like quality family time, or to be with the closest and dearest, whatever it might be. Write it down, complete it after this webinar if you haven't done it already, for you to really, really benefit from the session that we're giving you here today. And also keep in mind the how-to. So in green there, you see education is clearly key. Mastering your mind is a part of that education awareness, and then mastering the markets. Obviously, you're not going to master it in a month or in a year or even 5 years. I'm only playing on the theme of master your mind, master the markets. But the point is, decide how you're going to start to master your mind. Decide how you're going to master the markets, and how you're going to educate yourself. Doing some more educational workshops at IG Bank, reading some of the books that I've been mentioning, doing this webinar that you're now attending, and of course committing to that 10-day challenge. These are all ways of developing your goals that hopefully you will already be setting now. And then of course, imagine some of the successful models that you can follow. One thing would be to do the technical analysis workshops, which are currently being developed between IG and the Swiss Society of Technical Analysis, and that's based on the IFTA, CFTe qualification. So that's a qualification I have, i.e. I've done the exam and I've passed the exam, to learn about the technical side of market trading and investing. Maybe you might like to learn more about trade psychology through the work and collaboration that we're doing now with Intensity and IG, and ultimately look at successful traders. There's plenty of examples. You might know people who are successful as traders, or you might there might be many books that you could get your hands on and learn more about it. We are going to talk about qualities of successful traders during this webinar at the very end, when we cover some of the popular questions that I will do my best to answer. But anyway, this is an example of a roadmap that you can replicate, customize it for yourself so it's personalized for your needs and your goals. The second thing which I want to review and invite you all to do is the Dickens process. That's what it's known as, but basically it's a belief exercise. And the idea is, as exactly as I wrote down here, write down each of your old limiting beliefs, i.e. something which is negative, it hasn't really served you well, and make it a trading belief, because obviously that's what we're here to learn about. How can we trade more successfully? And then basically cross it out, because you don't want it anymore in your life. You certainly don't want, if it's leading to negative equity situations in your performance, then you clearly don't want it to follow that limiting or negative pattern anymore. Cross it out, then write your new empowering belief. Now, we did this in part 2, but this isn't just a one-off moment in time exercise. This is something you should be doing on a regular basis, daily, weekly. To be honest, at the beginning, you should be doing this very actively, because it's usually at the beginning, particularly when we're trading for the first time, that we need to make the most change. We need to unlearn a lifetime of conditioning based upon our nature and nurture in order to get to that peak performance state over time, and be more of a successful trader. And obviously patience is virtue, but you can't just sit and wait in your hands. You actually have to do the work. And I think that's why we're all here today, doing the work. And this is one of the best ways to do the work on a psychological level, to do the Dickens process and work on removing those limiting beliefs and replacing them with empowering beliefs. Now, one of the areas, one of the psychological methods that people apply the Dickens process, and this was made popular by the motivational coach Anthony Robbins, and I've followed his work like many millions of people around the world have as well, is to look at the past, present, and future scenarios of the belief, negative and positive, in your life. Imagine yourself in the past, in the present, in the future, and ask yourself how that limiting belief, but also the empowering belief, will influence your trading experience. So, for example, an old limiting belief is risk management is not important. In the end, if I'm a successful trader, I'll make the money anyway. Of course, I would prefer to cross that out, because risk management is very important, and getting it right is actually not achievable all the time. I'm probably going to lose more than half the times. I'm probably going to get it wrong more than half the times that I get it right. And what matters is in being a profitable, successful trader is how I manage my losses. And so, that's a present outcome statement about my limiting belief. I can go back to the past and say, hey, well, if I haven't managed my risk well, I would have lost X amount of money, and my track record actually proves that to me. I don't want to go back to that past anymore. I can go into the future. If I continue doing that, I will lose more money, and I'll probably be in a negative equity situation, which ultimately gets me out of the game and doesn't allow me to follow my goals. If I, and on the positive side, if I actually do make the change, of course, that leads to the road to success, and that will give me the motivation. Now, one of the key qualities to being a successful trader, and this is something I've seen time and time again in working with institutional traders in the banks, funds, and brokers, but also retail traders. So, people are people, institutional or retail, but there are nuances, there are differences when you look across the world, and when you look across the different types of strategies and types of money that are invested. But essentially, one of the key qualities in all successful traders is adapting to change. And this is a theme which I spoke about in the first workshop, talking about the most constant factor in life and in markets is change. This shouldn't be a surprise to anybody, but for some reason, 2018 was a big game changer for a lot of people. We didn't all expect it to be this year, but the bottom line is many of us got caught by surprise, and a lot of big, smart institutional money, not just all the other traders, but a lot of the real kind of big names out there have had a very challenging time in the last few months. In fact, quite a lot of professional traders and investors have been caught out by surprise on the recent volatility in the last month or so, and of course February of this year when we had the flash crash. So I'm showing you a zoomed in picture of what has been the case. You can see there on the right hand side of the screen the 2018 flash crash. That was after a 3-year compression in the market, and that was a margin call and volatility. You would have heard me talk about this on the first webinar, so I don't want to spend too much time on this. And then of course the second setup that we just had last month and before during Q4, and that was the top of the pops trade. Anything that was looking really sexy, really popular, like a momentum trade or a technology trade like the FANG stocks, Facebook, Apple, Netflix, and Google, has fallen from grace, and a lot of people got caught out in that. Now, right here, right now, we're having a deja vu signal, which I have spoken about on IGTV last week with the resident media presenter, Jeremy Naylor, and we spoke about how volatility will be the theme for 2019. I'll say it again. Volatility will be the theme for 2019. And what that means is we need to change our investor, trader mindset for the new year. So if you want to create a new year resolution, that's my suggestion. Adapting to change, how to actually evaluate your trading strategy from a technical perspective, but also from a trading psychology perspective, so that you can have better results in the new year of 2019. Now, 2 slides that we didn't have a chance to talk about in the last session is more on the wealth strategy side. So a big part of what I do is not only trade psychology, behavioral finance, but actually talk about ways to actually develop money or wealth, as it's otherwise called. This slide here is based on an interview that I had with with IG some time ago on wealth mindset. So if you want to watch that video, it's a 15-minute video, and it includes this slide with a whole lot more information. But essentially, it's based on the cash flow quadrant, and that's work is by a multi-millionaire, self-made multi-millionaire educator called Robert Kiyosaki. Very famous gentleman with a lot of good work, published work in this area of wealth strategy. And he talks about a cash flow quadrant. Essentially, he says 90% of the world is on the left side and 10% of the world is on the right side. Most of us who are here at this webinar want to get to the right side, and we want to learn how to trade and invest. And that's the I quadrant in the bottom right-hand corner. For whatever reason, most of the world are either employees or self-employed, and what that means is they're selling their time for money. That's not a bad thing. It's just the nature of the beast. It's what we do. It's what I still do. But the idea is, if you want to make sustainable passive income, you want to move from the left side to the right side. You don't have to migrate completely. What a lot of people do is they continue with their primary job, but they, in addition to that primary job, do extra activity, particularly in the investment or the business side, in order to develop that additional secondary passive income. So I'm not giving you finance advice here. I'm just saying this is what a lot of successful traders do. So you're here today to hear from me in terms of what I see and what I've studied from some of the successful traders and investors. And I can tell you, most successful traders and investors have some other work activity. They have other businesses or investment ideas that they're developing, and basically they have this big picture perspective in how to develop wealth. And of course, in understanding what I'm teaching you now, it'll also take a mindset shift to actually go from the employee, self-employed, employed mentality to the business owner investor mindset, which can be very different. The second thing on the slide is, remember I said our relationship with money in terms of our beliefs and our values is key. Really, if there's one statement that you remember today, it's our relationship with money matters. And I'll say it again, if there's one statement that I really encourage you all to remember that I said today in terms of trade psychology and improving your P&L performance in the market, the relationship with money matters. And one of the things I've noticed is our personal financial situation is often a reflection of how we trade our account. Now, it doesn't mean, you know, that's not a measurement of, you know, whether we're wealthy or not. So the more wealthy people tend to be better traders, and the opposite not. No, it's all about money management. If we are successful money managers in our own personal finance, we tend to be successful money managers in the market too, and vice versa. We're not great with doing our accounting and with managing our money and learning how to make a return on our existing money in our personal finance, then it's an obvious negative correlation with what happens in the markets. So one of the ways I tend to teach particularly first-time traders, but actually traders in general, is to apply this kind of triple S strategy, both in life and in the markets, where immediately whatever cash we're managing, investing, trading, or life related cash, to start working with percentages. Add a percentage that you will use to spend, but then make sure that 100% of what is existing cash isn't spent, and that some is saved for safety money, or for, you know, various projects that you're looking to save for, maybe like, you know, trading an account and you want a certain amount in the account. And a third, more philosophical point is sharing. Some of you might consider charitable causes if you're open to that, but I say that because it gets us, first of all, it promotes the attitude of gratitude, which tends to bring about positive returns tenfold with some of the people that I've spent some time working with. They tend to be big contributors to society, and they tend to do better as a consequence. The other thing is, from a mindset perspective, it removes the idea of scarcity, that we don't have money to give. If we give an amount, whatever the amount is, a small percentage of what we have, and that's a choice we make, it can really have profound changes to our relationship with money and ultimately our trading account. Also keep in mind that big money is made not overnight, but slowly, and the power of compounding mathematically proves this time and time again. So keep in mind, whatever percentage gain you want to make per month, per year, there's a multiplication factor that amplifies that amount just through compounding. So it's not get rich quick, it's actually get rich slowly, or just, you know, build up that equity curve over time. That also obviously helps you, you know, not be too stressed about, you know, how much money and how successful we're being in the market. Now, these points I briefly went over before. I'm just going to review it just one more time, just to crystallize that. And also, people like to have kind of like, you know, golden rules to follow, and these are ones that I follow on a regular basis. One, obviously, begin with your self-awareness, and so that's balanced mindset and peak performance, and that's basically what we've been covering here. 2, real money only with tested strategies. So I'm a big believer in back testing, but not just back testing, forward testing, because the one thing that back testing misses out on is all the market and psychology related anomalies that will take place. So we don't want to get lost or get trapped in the idea of, well, my back test was great, and therefore I'm going to make lots of money. You have to do a back test to understand what doesn't work, but then do the forward test to know what really will work. And that's the way to think about it. And ultimately, make sure you're doing some kind of testing, because if you haven't tested it, how do you know it's going to be successful? You really need to be testing. Think about opening up a demo account and just running a paper trade book just to see how that looks in paper terms before you then transfer to real terms. But ultimately, you're going to have to jump in the car and drive it at some point, because that's the only time that we really get to understand what trading is all about. Third point, only invest with risk capital. It's an obvious point that I'm making, but not one that all people listen to. Apart from the obvious, we need to be prepared to lose the money that we're trading. That's not the intention, but we need to make sure it's money that has been positioned purely for trading and not for other reasons, other life commitment reasons. The other thing is it helps reduce emotional stress by doing so, and obviously it avoids any kind of negative situation, any domino effect if something happens with that trading account for whatever reason. We need to know that money is set aside purely for trading. And then also think in terms of maximum amounts that you're going to trade of the amount that you're trading, but then also maximum amounts that you're going to trade per trade. So, whether that's 10% of the account as a maximum, or whether that's 1 to 2% per trade. The idea is basically capital preservation for point number 4. 5, we want to make sure that we have enough trade opportunities. If we're trading 1% risk per trade, then we have 99 more trade opportunities if we think about 1% gone, 99 to go. So probabilities are on our side. And then number 6, just follow your trading plan, which is a whole session in itself. Last point about the trade psychology side of risk management. Keep in mind that if you're investing or just kind of trading in a long position, in this example, that the risk reward tends to be better during the mid stage of a market cycle. So here I'm showing you on the left, again, a traffic light theoretical diagram, traffic light signals in terms of the colors. And what it shows you is the market cycle in blue. Think of a sine wave. The market starts from a low base, rises in value, momentum builds in, people start to pay attention to this trending situation. You start to hear the taxi driver in your local neighborhood tell you about this market trend, which is really looking good and people are making money in. But it's at the time that we're just building the momentum that actually the risk reward is best, i.e. you're slowly building up equity and making money, but you're not taking too much risk that would basically blow the account up or lead to negative equity. The issue is the time that we make the most amount of money is when we get into the cautious to high risk side. So basically when the market's moving the fastest in the direction of our trade, which in this case is up, that's when we make the most amount of money. The problem is we also take the most amount of risk. So just keep in mind that any market that looks like it's moving in a straight line, up or down if you're buying or selling, but in the case of the FANG stocks, up, or in the case of cryptocurrencies, certainly up, 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 at some point in time, anything that looks like a straight line will turn. It will reverse. And the key phrase which I learned from a mentor of mine is price acceleration is unsustainable in the short term. I'll say that again. Price acceleration is unsustainable in the short term. So always keep in your mind the trend is your friend until it starts to look like a straight line. And then at some point in time, if there's any signs of exhaustion, price exhaustion, expect, anticipate, prepare for a trend reversal. And ultimately, you might decide to buy on the dip if you're still bullish on that market. And if not, understand that markets can reverse, even in the case of Apple, where clearly the business model is very strong and it may be a buy and hold for many years to come, but technically it is overvalued, it is overbought. Doesn't mean that Steve Jobs didn't do a great job in developing the company, God rest his soul. But it does mean that as a trader, as an investor, you need to be focusing on your performance, your trade performance. So try not to get blinded too much by the love of the stock, of the market. Know that when you are blinded by the love, it's because you're probably doing very well and feeling very comfortable. And at that point, you've probably taken on too much risk. So the last point I want to leave you with for the review before we go into the Q&A session in the last 15 minutes is the quote from Dr. Tharp: make a list of everything that can go wrong and determine how you will respond to that situation. That will be the key to your success, knowing how to respond to the unexpected. This was a joke that I made to the IG team in Switzerland just before a conference that we attended in Geneva, that it's always good to prepare for the unexpected. That doesn't mean be fearful and let fear drive you and be worried about everything. No, that's the exact opposite of what I'm trying to say. What I'm saying is we need to be mindful of what can go wrong and prepare for it. It's just basic scenario analysis. So if you just see there in the bottom right-hand corner, I've got that kind of that bridge that was built over the earthquake point, and that's scenario planning. Is that me being scared about a fearful event? No, it's just me preparing for a potential earthquake and building a bridge to make sure I don't fall into the crack. And that could be a whole mixture of things. So understanding your risk, being prepared for a big drop in the market like we saw on the pound with the whole Brexit situation this week, or some of the other examples I gave on the FANG and cryptocurrency side. Okay, so I've got 2 or 3 questions, popular questions that were asked previously. May I ask the IG team, should I launch into the questions that I already have, or should I wait for some new questions?
Yes, Ron, you can start your questions, and then we will also have other questions from the attendants.
Okay, great. I'll jump into it just to save the time. So some of the most popular questions that I have received during the workshop sessions and in the lead up to this webinar through email messages that I've received from the delegates. The first question was, what are the top qualities of successful traders? Everyone wants to know, how does that person who does that well, that successfully, what do they do? And this is all the idea of modeling. All we're saying here is, if someone is doing something successful, whether it's trading or anything else in life, then maybe it's a good idea for us to model those qualities. The qualities that I have borrowed from a fellow trading psychologist in the States, who's also a doctor in psychology, his points, which I very much agree with, and I've touched on with the volatility chart, is this ABCD measure of institutional traders that he works with and has done for many years. And this concurs with many of the traders I've been working with too. A stands for adaptability. Successful traders adapt to change. They don't get fixed in old patterns or old price moves. They're continuously adapting to change, including the volatility that we've seen this year. Even if they've got it wrong, they just understand that they have to reevaluate their trade strategy, manage their risks better, and move forward. So adaptability is key. If you do not adapt, you die. Sorry to say this. Evolution and adaptability allows you to be successful. If you do not adapt, unfortunately, your trade strategy and your account dies very quickly. So adaptation is key to the changing market environment. 2, building on your strengths. Know what your trading edge is. Now, I know at the beginning it's not easy to know what that is because you're just starting out, but you should have an idea through some of the work that we've done in part 1, part 2, what you believe your strengths might be. It might be a personality strength that you have. It might be past experience you have in trading or in markets, whatever it might be. But you need to know what it is. Also, know what your strength isn't. So if you're not a fast thinker type of person and you tend to take more time to develop your ideas, doing high frequency trading is maybe not the best idea. Maybe you should look at more medium to long term investing. If you're a very fast thinker, then look at more active trading and perhaps more day trading type strategies. So know what your strengths are and work with them. And anything that isn't your strength, don't force yourself to do it. Third point, cultivating creativity. Really just try and encourage yourself to develop your ideas by learning through education, but also outside of the trading world. Try and have other activities that stimulate you intellectually and just generally physically in that kind of peak performance example I spoke to you about, mind, body, and emotions, because that will obviously have a positive influence on your trading. Fourth and final, D, as part of the ABCD pattern, developing best practices. This is an obvious point. Basically, you need to be D for disciplined, but also D for developing best practices. Do what works. And this is something you really need to be doing on a micromanagement basis. So have a daily best practice, which then builds up to a weekly best practice, which then builds up to a monthly best practice. If you want to create a new habit and remove an old habit, you must be actively doing a best practice to help you along the way, and you have to be doing it actively. The second question which I received is, just as a last point, successful traders are patient with winning trades and very impatient with losing trades. This was part of a question that I was asked about, how do we let our profits run and how do we cut our losses soon? And unfortunately, people tend to do the opposite. They maximize their losses and they minimize their gains. Again, it's one of the big reasons why we're here today on this webinar. So what you need to do is something like this. You need to be patient with your winners and you need to be impatient with your losers, and where possible, scale your risk. And I'll say this again, and usually I don't like to give direct guidance, but this is one of those moments where I think direct guidance is necessary. There is no need to maximize your risk. Start with the smallest risk and build it up over time, especially if you don't have a high conviction trade. You're not confident about the trade, reduce the risk. You're losing sleep at night because of a trade you just have on, reduce the risk. You feel that you're a bit too emotional because you've had consecutive losses, reduce the risk or stop trading for a while. Risk is directly correlated with your psychology. So if you feel you need more time to get used to risk, and also you need more time to develop as a trader, then just start with a small amount and build it up over time. But the point that I'm making here, which is the big picture point, is you need to be patient with your winners, let your profits run. But the moment you get a losing trade, don't cut it immediately unless you feel it's violated your trading rules. But if you get a loss, make sure you're very aware of what your exit level is, and you know that that exit level will minimize the loss situation so that it doesn't eat away at the profits that you're making. Remember, you want to let your profits run. You want to cut your losses soon. So this is how it looks. You're going to have usually more losses than you do gains. Sorry to say that, but that's the reality of trading. There are many times you're going to have consecutive losses, but that's not bad news, because what you're going to be doing is minimizing those losses. And if you just do that, you will make more money than you lose, and ultimately you'll have a positive equity curve. And out of the money that you make, if you make enough, then that'll cover any of the losses, particularly if you've been prudent with your risk and cut your losses quickly. Last question I'm going to end on is, what is the best way to break a negative trading habit? We all have many, and no one's perfect. The best way is basically, again, through, remember the traffic light slide I showed you. First of all, it begins with awareness. Any kind of change has to begin with awareness. And the psychology tests I've given you, the mindful or mental rehearsal exercises that we've done, helps. Either way, whatever your method, you need to start with awareness, then you choose a method for change, and then ultimately the transformation part you need to do repetitively. Now that there's a well-known psychological research that suggests any new habit takes a minimum of 30 consecutive days for it to be installed into our brain in order for it to actually become an automatic subconscious response. And Tony Robbins, the motivational coach, is famous for actually applying this technique successfully. And so any new positive habit that you want to install into your computer brain takes a minimum of 30 consecutive days of repetition in order to remove that negative habit, which hasn't been good for your trading, and then installing a more positive and ultimately profitable habit for your trading. So there's a few points there I'll leave with you, and I shall stop now to take on some more questions.
Okay, Ron, thank you very much. We still have other questions from the attendants. If you don't mind, I will read them for you.
Please.
So, great. So we have a first question from one of our attendees. In case of a major drop on the market, what would be the tips to keep a cool head?
Well, two quick things I'll say. I mean, one is psychological. Really, peak performance is the name of the game, and it's really important to already have a cool head before every trade. So if you don't start off with a cool head, then any big drop or any change in the market regime, i.e. increased volatility, is just going to make you go from bad to worse. So I'd make sure that you start your day with a cool head. Win the morning and you win the day and the trade. The second thing I would say on the technical side is big drops happen, particularly in the current markets. So I'd encourage you to reduce the risk if in uncertain and volatile times, so that you don't get hit too hard on the account.
Great, thank you, Ron. Second question about the best books you could recommend regarding trader psychology.
Simple answer to that question. I shall go back to the first slide which I included, and that is these two books here. There are other books written by Dr. Van Tharp which are more technical, and they focus more on trade strategies, risk management. He's actually very good with risk management strategies. So Dr. Van Tharp is one that I strongly recommend. Also, the basic training that I've done with him as part of his workshop and interviews that we've done together. So Trading Beyond the Matrix is a good book to recommend. The second one is Trading in the Zone by Mark Douglas. He has passed about a year or two ago, but his work continues to live on. These are the real kind of pioneers in trading psychology from a long time ago. And if you ask me which books I'm reading on a regular basis or hearing on audio, it's usually these books again and again and again, because I can never, I'm always learning whenever I read these books, and many other books. In the future, I shall be publishing a book on the subject, but that hasn't happened yet. I'll let you know when it does.
Another question regarding blogs and websites. Which one would you recommend?
So there's quite a few. At the moment, I'd probably follow up in a newsletter that we'll be sending you at the end of the webinar, maybe with a little bit more information. But I think there are many that you can pick from. I'd maybe recommend certain podcasts if you like to listen to podcasts, blogs. Follow your favorite trader out there in the market and see if that can add value to you. I'd say be a little bit careful if you're following, too many traders, because it's really important to create your own light, and also avoid getting burnt by anyone else's light. So always apply your own quality control. If you want to follow some of the work that I do on a more real-time basis, at the moment, the best way is just to catch me on social media, on LinkedIn or Facebook. And I'll just leave that with you. If you want to see the login details, just type in my first and last name, LinkedIn, Twitter, and Facebook. You should be able to follow the comments I'll be doing. And going in the new year, if you did want to follow some of the work that I have done and will do, I will be developing a blog and more real-time presence on social media.
Great, thank you, Ron. Another question from someone, I think it's Merens. Do you trade manually or do you use automated trading systems?
Good question. I respect both methodologies, but my preference is manual trading. I would actually say semi-discretionary or semi-manual. So I blend the two. I'm more of a strategic trader. So I do more deep research and analysis in my market analysis before I trade and invest. I like to do both. And to do that, I have to scan for a lot of ideas. So I will use models to scan for ideas, which I then look at manually with my eye to actually then execute the trade and manage the risk. The one thing I do want to say there is, please try not to think that one is more successful than the other. I can tell you some very, very profitable institutions out there that only use models. And then I can also tell you about traders out there that make phenomenal results just by trading manual. And I'm guessing IG might have clients in both of those groups and categories. So really, there is no right way or wrong way. You need to find which way works for you. And I think that's the biggest mistake that people do when they start trading. They try to follow someone else's way without working out what their way is. And a lot of that depends on your psychology. You need to know what your own drivers are psychologically and technically in order to work out whether you do manual or systematic.
Great, thank you. And maybe a last question, as we are already exceeding the duration planned for this webinar. Natasha is asking, how should you best deal with the loss regarding the mindset?
How should we?
Sorry, let me repeat the question. How should you best deal with the loss regarding the mindset? How should you manage your mindset in losing situation?
Okay, now psychological scientific research has for some time proven that losing money triggers more of a fearful reaction in our mindset. So our lizard brain gets triggered when we lose money more than when we're making lots of money. So fear is greater than greed, is what I'm trying to say. That's what the science says. Having said that, in my own trading experience and also having worked with other traders, ultimately we need to find a trading zone. So whether you're making money or losing money, you need to, and your emotional pendulum is swinging from greed to fear. The name of the game is to be in the zone and to be balanced, and that's the peak performance that I keep talking about. So from a behavioral perspective and from a psychology scientific research, we get more scared when we lose money, and I think we all know that. So we need to be able to kind of treat trading losses as learning experiences and as information. You know, drawdown, if I can just quickly go to that slide just at the back, just very quickly. Drawdowns, each of these red arrows is a learning opportunity. It's information, price information that the trade strategy didn't work then, but it might work next. It's a probability distribution. You know, it didn't work X amount of times, but it is going to work Y amount of times. So really, we need to reprogram our understanding of what a trading loss is. The other thing is we need to avoid thinking it's all about being right. We have a lifetime conditioning of being right, you know, in education, with our parents, in our work environment. Being successful in trading is not about being right. It's about basically being consistent and following a successful strategy. But the consistency is not in getting it right 100% of the time. The consistency is in how you manage your winners and how you manage your losses. And that's what this example is all about. So psychologically, you need to reprogram the experience of what a loss is to yourself. Also practice some mental rehearsals and mindful exercises so that you can get into that balanced trading zone state. And the only other thing I would say is manage not just your losses, but also your gains. Make sure that greed does not get the better out of you in a trading situation.
Great, thank you very much, Ron. Thank you all of you that have attended this session. I hope you all enjoyed Ron's presentation. IG Bank would like to thank you again for your attendance and loyalty. Do not forget to visit our website, ig.com, in order to have a look on our educational offering and especially the different events we are organizing, mainly in Geneva and Zürich, but also in other cities in Switzerland. Thank you, everyone. We wish you all a very pleasant day. Goodbye.